Hello and welcome to Macro Mondays here on Landy's Crypto Corner. Today is February 17th, 2025, and we're looking at Bitcoin as always. We're going to be following up with where we left off on Friday's video. And of course, we do have the Tuesday candle open here as the Monday session did just close. And we're going to take a look at how things have remained the same and how they might have changed a little bit. We'll start out with where things have changed. We now have a lower high on the daily. So we have a little bit of a swing low to a swing high up here. This would be a valid lower high to take out to try to change the trend even. Wow, say that 10 times fast, huh? Look, 98,900 is going to be the area to beat for the bulls to the upside. And this would set a daily low and break a swing lower high. And this would look pretty good if the bulls can pull this off, as we did get a closing lower high in here. Now, we didn't get necessarily a closing low over here. It's more of just sideways chop to a closing lower high. We have a lower low. You can call it locked in, at least the swing is, but realistically, what is this? It's sideways price action around a support. That support being, right around the $95,000 to $96,000 range by the lower first standard deviation that Bitcoin is touching right now at 95,500. Now, if Bitcoin does drop this area, I would start to entertain a trip back down to test this higher low swing down here as it relates to the lower low swing here at 180 in this case. We have a swing low currently of this consolidation right around $94,000. If Bitcoin does start to trade below even yesterday's low at 95,200, I would look for it to start trying to test down to that area around $94,000. That would also mean that the lower second standard deviation at $93,000 is fair game. I do want to call out that weekly yet again. I do think that everybody should be aware of that weekly close open here. And that weekly close open's coming in at, this shouldn't be green. Let's just go ahead and make that yellow for now. That weekly close open higher low is at 93.5. So bulls don't want to see continuation below there on daily closes, especially anywhere below $93,000, because then we are looking for, a retest around the support area at 92,000. We got this close open 92.5, right around $92,000. We had the spikes into that big support area that we've talked about a lot between 88,700, which is this higher low swing, and around $92,000. So that's where I would be looking, possibly even a retest of the $89,000 higher low swing on the weekly as well. So what does that really mean, like longer term? Not much. The monthly higher low is still at $49,000. Please, understand that the weekly can enter a short-term downtrend. It's not going to be fun for the bulls, but things aren't over until we see at least an uptrend break, meaning the last higher low on the monthly is taken out, or we see a monthly lower high. And I don't think we even have a monthly high painted just yet. Nope. Not on a confirmation of a close. So yeah, there's nothing really to worry about. I see a lot of it's over, bear market's here. It's like, really? Okay, have fun. Go ahead and take all your shorts out right here, right now. Go all in on the short side then, if that's really what you believe. I don't think people really believe that. I think it's more of people trying to engagement farm, to be quite honest. Now, there is fear in the markets, so don't get it twisted on that regard. And, if you're a trader and you're positioned accordingly, you would be short right now. So you wouldn't be fearful. You'd be looking out for where could it potentially bounce. Where could it potentially bounce? Right here in this chop right here on the lows here. There is a lot of supply and demand fights going on in this area. A lot of it typically happening throughout the week, last week. In through the weekend, and then we saw some actual candle bodies, and then we had a failure on Saturday to really do much, and then Sunday just moving down and painting a lower high. So again, closes above 98,900 here. You can call it $99,000 just to be fair. And, I would look to where the upper first is, somewhere around that 100,000, 200 to 300. And that just happens to be right around this swing high here. Above there, I'd be looking around 102 to 104. Keep in mind where the upper second standard deviation is at 102,700. And we have the upper third coming in just above there at almost 104.8, kind of cutting across this lower high here. So we can put that in perspective. We'll just label this. We'll label this one as the weekly higher low. It's a weekly close open, just to kind of denote this while we put our local areas of interest on the chart here. And now you can see that I also have criteria for setting a daily low. Now, Bitcoin did close below the this area of interest here around 96. It's the upper 95 to $96,000 area. Technically, it's got room throughout this range where the lows have been swung. I'd call it 95 to 96. So it's fine here. If you start to see it drop, it's going to go test that low at 94, and then it's really in danger of going and retesting that weekly by that lower second. Anywhere below there, it's daily expansion down into the support 92 to 88,700. This higher low over here, that's also the 1.168, not 618, 168 or 16.8% fib extension above the prior cycle high to low extension. So $69,000 to that $15,500. This is an extension of that. So 16.8% above the prior cycle high, and governing the top side, with some deviations here, big ones at that, the 1272 at 103,650 or so. Now, again, to set a low on the daily, we need to see it close above yesterday's high. That would be Monday's high at $97,000. Now, I still would want to see it come back up and close above what is actually painted the actual closing high here, slightly above there at 97,500, and of course get above the basis band there, just under $98,000 to go test this lower high swing at excuse me. Jeez. At just shy of $99,000. Anywhere above there, of course, like I said, be aware of 100,000 to 101 here, and that swing high up here at 100,235. We're right around where the upper first is coming in, and then it's right in the thick of overhead resistance between 101 and 104. Excuse me. Now, I do want to keep in mind that traditional markets were not open on Monday. So understand that it was a holiday here in the United States. Yes, I know that there's other countries that don't observe, but, I want to see what the U.S. markets do upon open and of the Tuesday session. Now, of course, we have had futures open, but hasn't done too much. Nothing as intriguing as a long weekend with the actual markets open. So there really wasn't much going on in futures. So now, when looking at the daily, as I said, you'll get a technical daily low set above $97,000. That doesn't excite me at all. I would want to see close at minimum back above the high here at 97.5. And definitely need to see closes starting to close back above around that $99,000. Even if price doesn't progress further to the upside, and maybe it puts in another high, at least it would be a higher high swing, come down, look for a higher low, equal low structure, that then can come up and actually start to break out of this really choppy, nasty range for the bulls and the bears, quite frankly. So now, there's not too much, like, I'm not going to look to the top side of the range. And quite frankly, if things were to get nasty, the downside, let's say Monday is just absolutely hellacious. There's all kinds of news regarding reciprocal tariffs and the market gets freaked out. maybe there's some, Bank of England gold stuff going on and everybody's freaking out. Markets are really shaky and Bitcoin dumps out below the 88,700. Well, keep an eye on, 87, low 87,000, 87 and a half down here by the close open to $85,000. Again, I want to call this out because there are certain like fib extensions you can pull from other ranges that will get you right in this area around that $85,000 and under to 80. But understand that this was an expansion from the prior range, right? So you had 73,835 was the high. We saw this as a slightly lower high as Bitcoin was in a nice uptrend. So this was an uptrending structure, but it was trying to break out, came back down, and then initiated the big expansion up. This was the first bearish candle of that expansion up, and its low is at $85,000. It's not a significant low on higher term timeframes like the weekly or monthly. So understand that if the mid 80s are lost at 85, I would expect mid to low 80s to be the play. 80 to 85, and then possibly a retest of the prior highs over here. That's so you can start entertaining upper 70s to possibly 75 to 70. But there's nothing actionable there right now. Excuse me, I'm trying to hold a cough. So, and there's nothing to really be fearful of in this accumulation range right now. And there's nothing really that interesting going on either. It is chopping the ever-living shit out of people, though, who are trying to pick market direction of like alts and meme coins and stuff like that, although there's other extenuating circumstances happening right now in the meme coin ecosystems. But, that's why I talk about Bitcoin, because Bitcoin's where it's at. You're not experiencing the drawdowns, and everybody says, well, I'm not going to get rich trading Bitcoin. Well, if you're actually trading it and you understand how to trade, there's plenty of ways to trade. You can trade traditional market options on some of the bigger spot ETFs. You can trade the miners. You can trade some leverage products over there, or you can trade leverage products within the markets here, or you can take hedge positions on exchanges. There's all kinds of ways to make money utilizing Bitcoin. And I'm not saying that you shouldn't play with memes, but they're experiencing a little bit of downside, and then the narratives surrounding what's going on aren't helping either, which is why you only hear me talking about Bitcoin on this particular page, whether you're on X or on YouTube. And in this case, I do think that maybe some people might want to come around to getting some exposure to Bitcoin. It's far more powerful now with Bitcoin DeFi ecosystem products out there as well. So anyway, I'll get off that horse here, and we'll go take a look at RSI. Yeah, nothing really interesting here. Is there potential for bullish divergence? Maybe. Not really anything too interesting. Yeah, not anything too interesting. So no. Bearish control zone 93.8. Just above that weekly close open higher low structure. Okay, so understand that heading down towards that weekly lower second standard deviation on the daily, we're looking at the bearish control zone or the edge of it getting tagged, and momentum is shifted to the downside for regular Stoke. Again, this is a regular Stoke, not a Stoke RSI. Stoke RSI measures the velocity of the RSI. We just looked at the RSI. We don't need to know the velocity of said RSI. In this case, we're looking at close over close price momentum, and 96,500 would be the momentum pivot to turn the K read back over the D read here, basically shift momentum back to the upside. We would need to see follow through close over close. So we would need to see, of course, if the the Tuesday candle now that's open closes above 96.5, then we need to see the Wednesday candle follow through with that. And of course, I'll be talking to you after the Wednesday close. So we'll find out what happens then. But let's take a look at the weekly. We can get rid of, apologies for my voice today. Yeah, we can get rid of this. And we can just kind of take a look at the compression on the weekly, and we'll take a look at the 5-day because that's going to give us the real clues as to what I believe is going to end up happening on the weekly. So we will be watching that carefully going forward because it's in a very, very tight compression. And in this case, on the weekly, we see that we are deepening that compression. We are probably like a week or two out from maybe the etchings of a move beginning. But we're not really seeing a tight compression just yet. Upper first is here at 103,200, so it's right around our bear market, kind of our bull market to bear market fib pole here. So our 69 to, oops, we'll fix that in just a second, to low to $15,500 low here. If you look where the upper first is in terms of this fib, you'll see that it's coming right in line with the 1272 overhead. So, one saving grace for the bulls here, basis band, which is the 20 simple, is just above the 1.168 here, coming in at 90,500. So it has now entered the bottom side of our range here. Lower first is getting some distance away from the previous top side of the range. That's a good thing for the bulls as well. Even if price did start to fall pretty aggressively, if it didn't fall to the lower first, we'd likely see that update in the next week to around $80,000. Lower second is now above the last higher low of the move, or the first higher low of the move, which is good at $65,000. I like to see that. Upper second is now at 115, almost 116, and there's that upper third coming in line with our 1414 as the bands start to compress back together here at 128,000, and slightly above there. It's almost 129. So not too much going on in the weekly. As I've mentioned, we have the lower high close with a higher high swing. And we have a higher low in place on the close with a higher low swing at $89,000. If we do see closes below $89,000, while it would be a trend break with a lower high close in place, it doesn't do much until we see further, whatever happens in the next upside move. If price were to get distance to the downside, bounce up in a lower high territory, then we're looking for a long form accumulation, like months and months and months. And this has already been a long one at this point. A lot of bulls were expecting things to keep on going and going and going. It's not something that we were necessarily looking for here after an extremely volatile move, essentially from the higher low here at 52.5 all the way over $100,000. So yeah, that's a big move to happen, in a very short time period, matter of weeks. And, a little bit of a cool down is quite needed at this point. So might be a little boring for the bulls, unless we see something start to fundamentally shift and we see, the etchings that start on the daily above $97,000 and especially above $99,000 to $100,000 this week. If that were to happen, that would look pretty good for the bulls. What do we have going on with economic events? We have home sales, FOMC minute. Yeah, that's right. Powell's minutes and the Fed minutes are going to be out this week. So we'll see kind of how the market reacts to that stuff. And weekly is going to have a momentum pivot of 105,350. Not too much going on in terms of the RSI here. We have the bearish divergence continuing to play out here. First drive kind of corrective from where it was. Is there more drives? Absolutely. Is it valid? No, it's not as powerful unless it's in trend, and we don't have in trend. So even the bearish divergence that you see populating here for this particular indicator is corrective at best right now. If it is in trend bearish divergence within this uptrend, then it's powerful. We have to take those ones. They're not quite as correct. They will be corrective at first as they build, but that's where we would start to look for things to, potentially have major shifts over time here, but not too much going on in that regard. So I'm gonna let you all go. We've been running about just shy of 20 minutes here. So again, for the daily, keep an eye on $97,000 yesterday's high, the Monday high. If we see closes above there, that would start to look okay to set a closing low, another higher low and a swing if it doesn't swing any lower. And then we need to see this lower high right here at, we'll call it $99,000 taken out. Go and test this range high by the upper first, just above $100,000. And then above there, we can start entertaining moves back into 101 to 104 up there. I don't have the range on there, but it's burned into my skull. And then above there, we're looking for essentially the highs: 104, 106, 106, 108, 108 to 10, and like I said, we take it out to 112, and then we start getting more volatile to the upside. Let's go ahead and just actually check real quick on the 5-day here. So 5-day is going to close with the next 2-day candle. You know what? We're going to take a look at that 2-day. I did say on Friday we're going to look at the 2-day. So not too much going on. Did fall and close below, again, the basis band here at 97,800. So just around $98,000. Upper first is where? Just above 101 at 101,560. Upper seconds running across the highs here at 105,240. Upper thirds at 108, almost 109. Lower seconds, the big one to watch. It is, if we do see closes below 90,500 here, that then close below $89,000, that would be our expansion to the downside that we'd be looking for. And then, of course, above the upper second at 105, 240, we're looking for the highs as the next condition to be met, which would also put it above the upper third there at 109, 360 to then get that next big expansion to the upside here. And I will tell you, it's starting to look like it does want to maybe start looking as though it wants to resolve soon. I don't know how soon. We will find out, right? 104, 103, 900, 104 is the momentum pivot for the 5-day. Not too much interesting. Let's go look at that 2-day. 96,866. So basically $97,000 is the momentum pivot for the 2-day. This is a range on the 2-day with big expansion to a range here. Closes below the lower second. It's testing the lows and possibly lower. Lower seconds at 92.5. We would be testing then, of course, the 91, 180, and then 89 as the kind of checkpoints for the range here. Anywhere below there, it's aggressive expansion while losing support. Again, it could hold on to some of the daily levels, but it's already, an expansion if it starts closing below there. And then we've got upper first just below the 1272 here, and that would, we'd start to look for the upper second there at 106.3, cutting across the closing highs here, and then we need to see, of course, the all-time high broken for that expansion and resolution of this kind of range look here to the upside. Not too much happening though right now, I'll tell you that. Back into a compression. We're pretty much fully compressed here on the 5-day. We're starting to get there on the weekly. So, next move is coming pretty soon. We'll see if it starts to show itself this week or not. Otherwise, we just, I think, what are we probably looking at the end of the month then for things to start playing out? And, direction will be very, very obvious. So do prepare yourself. We are coming into the end of the month, and maybe the first part of March will be resolution. We'll see, but it's getting close. It's definitely getting close. So have a wonderful morning, afternoon, and evening, no matter where you are in the world. Please trade safe, and of course, as always, stay safe. With all that being said, Landy out. Take care.